afternoon, everyone. Here's a quick update on the latest market developments across the major currency pairs and key commodities. So we start with the currencies. The markets are on edge this morning after a CNN report revealed that US intelligence believes Israel may be preparing to strike Iran's nuclear facilities. While no final decision has been made, the news has boosted the safe haven currencies like the Japanese yen and Swiss franc. And Iran's supreme leader also cast doubt on nuclear negotiations with the US, further adding to tensions. And President Trump also warned that the failure to pass his proposed tax bill could result in a significant tax hike. In Asia, Japan is reportedly open to accepting the reduced US tariffs rather than seeking exemptions, with a high-level visit to Washington scheduled for Friday. And back in the US, Fed member Muslim noted that the heightened uncertainty is slowing the spending and investment, signaling risk to economic growth. And Trump also announced a $25 billion Golden Dome defense initiative targeting a deployment before the end of his term. And elsewhere, the RBA, Reserve Bank of Australia, cut rate by 25 basis points to 3.85%, while the Bank of Japan flagged liquidity concerns in ultra-long bonds. And in Europe, the bond issuance hit €1 trillion, and the UK paused trade talks with Israel amid the new Russian sanctions. Now turning to WTI crude oil. The oil is stabilizing after OPEC's recent move to ease production cuts, coinciding with a semiconductor tech deal between the US and Gulf nations. And this deal highlights a growing link between the energy and tech sectors, especially around the AI and Middle Eastern economic transformation plans like the Vision 2030. And with the rise of energy-intensive infrastructure like the data centers and chip fabs, the oil demand could increase, giving OPEC an opening to raise output. But still, the US Gulf chip agreement is stirring political controversy at home, with fears over potential tech leaks and national security risk. And last, let's talk about gold. Gold closed 1.5 to 2% higher at 32.89 on Tuesday and continuing its safe haven rally. Investors are reacting to Moody's downgrade of US sovereign credit, uncertainty over trade policy, and also broad geopolitical tension, especially in Ukraine and the Middle East. Despite the Fed officials voicing caution, US Treasury yields remain high and the market is still hoping for a dovish turn. And rate cuts from both Australia and China have only added to gold's shine, keeping the sentiment firmly risk-off. So that's all for today's afternoon review. Thanks for tuning in. I will see you in the next one.